I think there's going to be a one-time shock to people who've stored their wealth in fiat, and that's going to be unpleasant. You know, you got a big bond portfolio. I think you're gonna be shocked.
Yeah.
Sadly, I'm quite certain we will get to 180 to 240 or 50 this time. I think there might be an argument that we go even higher.
Lepard begins by acknowledging that while the transition to Bitcoin will ultimately lead to a better world, there will be a one-time shock for those heavily invested in fiat-based assets. He predicts that individuals with significant bond portfolios will experience massive losses as fiat currencies continue to devalue under the pressure of relentless inflation and monetary debasement. Looking at the current cycle, Lepard anticipates Bitcoin moving to $142,000, followed by another flag formation before rising to $180,000. He expresses confidence that the next cycle could see Bitcoin reaching between $180,000 and $240,000, with the possibility of even higher levels.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think we're going to go into a much better world. I think we're going to make a transition to Bitcoin without incredible pain. I think there's going to be a one-time shock to people who've stored their wealth in fiat, and that's going to be unpleasant. You know, you got a big bond portfolio. I think you're gonna be shocked.
Yeah.
Sadly, but that is what it is. I think the average if you look at the average person, like take a plumber, they have some savings, they have a mortgage on their house, they do well, they feed themselves. I mean, we go through an enormous monetary thing. Okay, well, their house is going to reprice in the new money. The debt that they had will probably be a lot less valuable. Their savings will probably be a lot less valuable. But if they're young and they know how to fix toilets and do plumbing shit, they're gonna be okay. They're gonna reprice in whatever the new currency is, and people are gonna need that useful skill.
Yeah.
Do you know what I mean? So it's not. Now, if you're a big wealthy guy and you've got all your money in a bond portfolio, I think you could lose a large piece of your wealth.
Right.
There will be a climatic event that will make enough people realize that what we have isn't working, and that we need a sound money standard. I think that's what will happen. And I think, if inflation gets higher and persists, and we keep printing money, eventually, I mean, the outcry already is high, and it's only going to get worse. I like the way it's behaving. It builds a base and it moves. We're at 58, move to 100. That's a 40-point move. There's a thing in technical analysis called flags, where and flags fly at half mast. So 58 to 100 is 42K. 100, next move, I think we're going to go to 142. Okay, we'll probably flag again there. The next one goes to 180. My sense is, I don't know how high this cycle goes. I hope a guy like Samson is right and we go to $1 million a coin, because I might sell a few at that level. I'm quite certain we will get to 180 to 240 or 50 this time. I think there might be an argument that we go even higher. I think the last cycle was somewhat truncated by the China ban. The SBF thing obviously took us down to an extremely low level. It's really hard to say. I mean, I tend to rely on the power law as kind of a base case. I mean, it's got 97% correlation looking backwards. Yeah. And it would suggest that the top this time is in the twos, in the low twos. But things are different. I mean, we've got nation state adoption, we've got an ETF. If you look at the historical drawdowns, the biggest was 90. They've been getting less deep. I think the last one was in the 70s, low 70s. I would expect this one might be in the 50s if we do have. But so if I had to model, if I just had to guess, maybe we go to 250 and then we draw back down to 150. I don't know. I mean, I do think with respect to the power law, I do believe at some point it'll break. All models do break. I think this asset's unique. And these models, as Saylor says, these models are meant to be destroyed. So the model will break into the upside, in my opinion. But that's kind of hyper Bitcoinization. I don't know, when everyone comes to realize, oh my God, I got to get this. And I don't care about the price.
Right.
I don't know when that'll happen. I don't know if it'll happen this cycle or if it'll happen next cycle, but that's coming. I think it could be just more, RIAs doing it. I think it could be more institutions doing it. I think that just, it's just going to spread. I mean, if you look at, there's a good chart in the book that shows adoption curves and how they happen. And, we're really at the early part of it inflecting to the upside. I mean, when we adopted cell phones or when we adopted PCs or when we adopted anything that's a new technology, Saylor said this. He says he thinks the next 10 years are really the golden age. I think he's right. I mean, and so therefore, I think the drawdowns, they're not going to look the way they have in the past. I think we were building a base prior to a pretty hard run. And we'll get drawdowns. I mean, people will use leverage. They will get way out over their skis. It will get ahead of itself.
Sure.
And by the way, some of the old-time hodlers will say, gosh, 250? I've been holding these things since 10,000. I got a whole mess of them.
Yeah.
Yeah, I'll let a couple go.
Yeah, of course. Yeah, that's how it works.
I mean, that's how it works. Yeah.
Lepard asserts that Bitcoin is a superior technological evolution of gold. He acknowledges that gold bugs often struggle with Bitcoin's digital nature, but he counters this skepticism by emphasizing the role of money as a ledger system. Just as bank account balances are mere digital records, Bitcoin serves as an immutable, decentralized ledger that improves upon gold's limitations. Addressing common objections, he highlights how Bitcoin's security and decentralization make it resistant to government suppression.
Look, I'm very comfortable saying I think that we have a lot of inflation in the future, and people are going to have to learn to live with that and need to protect themselves from it. How bad? That's debatable. The book talks about kind of probability weightings on all the possible outcomes with respect to inflation. The crime, I think you're right. I mean, I think for the upper 10% of the country, they don't even notice what's going on. They're generally fiat-based and doing pretty well. I think for the bottom half of the country, everybody is really badly hurting, and even in the middle section, people are pretty badly hurting, and that's sad. I don't interact. I live in a pretty nice area. I don't interact with these people on a daily basis. I have a sister who lives in a rural area that's very middle class, and she tells me the stories, and I'm just horrified by how tough it is for a lot of these people. So where's it going to go? I don't really know. I mean, the best case I think is that we would do a monetary reset of some type. And we would go back to sound money. I mean, if you want to kind of cut to the chase of the quick and correct solution, money being broken has happened in history many, many times over hundreds of years or thousands of years. And when it happens, what happens if a society then decides we are going to go back to money that is not broken, we're going to return to sound money, things will self-organize and get better, much better, quickly. Really quickly, actually. But that choice has to be made. You can't wish that it's going to happen without making that choice. I mean, you're either on a sound money standard or you're printing and on a fiat standard. And the outcomes under the two are substantially different. Bitcoin's going to succeed because it's better technologically. It's easier to verify. It's got, triple entry accounting. Just in every respect. I mean, and people say the gold standard failed, and it did, partially based on technology, but also based on politics. I mean, they figured out how to create paper gold. Nixon, basically broke the gold standard. He didn't have to, but he did. But Bitcoin is a much better version of gold. It doesn't deflect. It doesn't debase. It will become the superior asset to gold, and gold will have jewelry value. That's going to take a lot of time because there are 8 billion people that understand that gold has value, and there aren't that many people that understand Bitcoin has value. So there's, we're in this transition period between those two extremes. To answer your question, how do I orange pill gold pugs? So I generally encounter a couple of objections, and I go to the New Orleans Gold, what used to be called the New Orleans Gold Show. Now it's the New Orleans Investment Conference, and the guy who runs is a good guy, Brian London, and he's gotten much more open-minded about Bitcoin. He's had Lynn there, he's had me there, he's had Jane Lavish there, even though Peter Schiff goes every year and argues with us vociferously. But I generally, a lot of people get hung up on the physicality of it all, and with those people, I go to the money as a ledger argument. You know what I mean? Look, I mean, you can't touch the money in your bank account. It's just some numerals on your computer screen, right? I mean, the cash isn't really there. I mean, money's a ledger. Always has been a ledger. Before gold even existed, people in caves made marks, which were indicating some kind of debit and credit system of who owed who what. So money doesn't have to be physical. What are the other objections the gold bugs bring up? Well, sometimes they bring up the government's going to kill it, but the ETF kind of swatted that one away. Sometimes they bring up, well, it's MySpace and Facebook will beat it.
Yeah.
As we talked about offline, that's kind of not realistic because of the fact that it took so many years to build up this immutable network, and if anyone tried to do it again, it would be very susceptible to a 51% attack. Right. Fed broke its charter like from day one, no surprise. But the price level basically doubled. From 1916 to 1921, the price level doubled, up 100%. That tore up the society. Ku Klux Klan, all kinds of race riots, all kinds of labor strife and strikes and shutdowns. Okay. Charles Ponzi was 1919, Ponzi scheme, kind of mirrors SBF today, right? Chicago Black Sox, 1919, betting, cheating scandal. I mean, and you can just kind of see how, societies get ruined through bad inflation. And the interesting outcome of all that, of course, is the progressives at the time thought, well, this was all caused by alcohol.
Right. Yeah, interesting.
Not that they didn't realize it was the broken money that was causing all these problems. They thought it was alcohol that was causing the problem.
Yeah.
Oh, let's pass the Volstead Act and go dry, and we'll solve it. Which, look, I don't drink, so I'm not opposed to the Volstead Act per se, but the point is, there was a lot of strife as a result of that. Some people say, well, the technology, and the other argument I've heard more recently is the quantum computing argument.
Yeah.
And I've dug into that, and I've read as much as I can about it, and I think it certainly constitutes a risk, but I think it's a very far out risk, like like decades out.
Yeah.
And I also think that we could actually apply it to Bitcoin, and maybe there'd be a hard fork, where everyone would migrate over to the new thing that solves that problem. So I just don't worry about that. I mean, decades. I mean, I don't have super number of decades left, so so I think I'm good. But it's. Look, there are risks to any choice financially, and everybody knows that. And so, I don't have all my money in Bitcoin. I don't have all my money in gold. I have some of my money in real estate, and I even have a small amount of cash just because I want to be able to take advantage of opportunities.
Lepard draws historical parallels to illustrate the dangers of inflation and government mismanagement. He recounts how, in the early 20th century, excessive money printing led to social unrest, corruption, and economic disarray. Examples such as the Ponzi scheme of 1919, the Chicago Black Sox betting scandal, and the rise of prohibition all stemmed from underlying monetary instability. He warns that similar patterns are emerging today with rising crime rates, social divisions, and financial scandals mirroring past inflationary periods. Please like and subscribe.